Hope you all are having an amazing Christmas weekend with your loved ones and a well-deserved break. So now, as we approach the last week of 2021, and with so much happened in the last 3 weeks, our expectation is that the market should go up in the coming days and months, correct? But as investors, we also need to look at all the angles, and that includes what could possibly go wrong in 2022. So in this video, I'll share some data and research that shows a few things about 2022 and some timelines which are pretty interesting to look at. Let me share a few details about how Omicron has changed the outlook for 2022. And as a gentle reminder, if you like content like this, then please give it a thumbs up and consider subscribing. And if you like to talk about topics like this and more, then consider joining our Patreon and Discord community. Links are in the description below. So let me share my screen and let's look at the data sets that are pointing to few things which we need to know as we go into 2022. So it's too early to label Omicron one way or the other, but from what I have seen so far, it's more contagious but less deadly. So that might help the world get back to something like pre-pandemic normal, which means spending more money on services, which I'll explain in just a second on this chart that you're seeing on your screen. But as per Bloomberg, a catch-up on services spending could boost global growth to 5.1% from the base forecast of 4.7%. But we may not get that lucky, right? Nothing is set in stone. A more contagious and deadly variant could drag on economies, and given the restrictions from countries like UK, we could see 2022 growth slow to about 4.2%, which will not be good for services company. So let's take a look at the chart together. So this is a chart that basically draws the pre-pandemic trend, the upside risk, the downside risk, and the baseline scenario. So let's assume that there was no pandemic and we were right 2019, where we were in the fourth quarter of 2019. We continue to grow like that, and we were supposed to reach 110 on the index scale on this side that basically estimates the global activity in trade, transport, and hospitality. Now, with the pandemic, of course, we saw the all-time low in this index, and then after that, we have seen a recovery. Now, one of the upside risks is that Omicron doesn't happen to be or doesn't prove to be very deadly, and of course, things open and countries put no restrictions, which are less likely. We could see ourselves getting to pre-pandemic level by the end of 2022. But because we have the pandemic going on right now, we are expected to approach about 105 level at this towards the end of 2022. But with the Omicron, these things have changed, or there is a huge shift in how the market are seeing 2022. This is where we are right now. And the expectation is that in the first quarter of 2022, fourth quarter revenue or sales is not going to come out well because of Omicron. We just saw 1,500 or over 1,500 flights got cancelled because of the Omicron, or people getting sick, or not enough people vaccinated. So all this combined adds to the uncertainty and of course the fear in the market. And we saw that how the fear or the Omicron variant have hampered the growth of 2021 fourth quarter as well as Q1 of 2022. So this is, of course, not a good news of what's going on in the economy, especially for the services sector. But everything could turn out to be not that big of a deal, where Omicron would just go away in a week or 2 weeks, and we have probably peaked the sickness level, or we have peaked the closures and the restrictions. And from here on, we could see reopening or reopening plays come into play, which will be very exciting and, of course, very good for the economies and, of course, for the service sector. Now, the second biggest risk is that we all think that supply chain issues will resolve, the world will reopen, and Fed is expecting that the inflation to start come down after Q1 of 2022. But what if all the upside risk on inflation takes place at once? So this is, of course, an inflation chart right here on your screen. I'm going to enlarge it. So this is where we are in the fourth quarter. We have seen an all-time high 6.8% inflation that hit. Now, in my opinion, in Q1 of 2022, we will see inflation hit almost 7%. But the Fed is expecting that after that, the inflation is going to come down and we will settle towards the end of 2022 somewhere between 2 and 2.5% of inflation. Again, that's what Fed is expecting. But what if Omicron causes more supply chain bottlenecks, escalation in Russia-Ukraine tensions sends gas prices up, and labor shortages pushes wages higher? Even with oil prices falling due to the Omicron-induced slowdown in global growth, the net impact of the combination of shocks could be stagflation, where current inflation could run longer than expected. And that'll be really, really devastating for Fed because, of course, they are putting the policy in place thinking that the inflation is going to come down. But what if the inflation remains at that level for a long time? And if that happens, then, of course, the companies we expect to do well in sales and revenue for next year may not happen. Banking could also suffer longer as Fed may have to come out with other measures to keep the economy stimulated. Again, something to keep in mind. Now, these are just a few points, but of course, you and I, we both have many things that comes to our mind when we think about stock market in 2022, especially since our wounds are too fresh right now from the past few weeks. Let me share a chart that shows these from the highest to the lowest. So there was a survey that was conducted among 900 people that basically talks about, or these are all traders, these are all people in the stock market, and this is a Bloomberg survey and you can find it on bloomberg.com, and they talk about what is the biggest tail risk of market in 2022. Number one is inflation. Everybody is worried about inflation because they don't know where the inflation is going to end. Of course, Omicron has really put everything upside down when it comes to inflation. Then the second fear is coronavirus. Of course, we are dealing with Omicron, but what if there is a third variant which is on the way and that may add more pressure to the Fed and of course more closings. Then we have war where we have seen, Russia and Ukraine, what's going on with them, and of course China, Taiwan. There's so much uncertainty in the world. And then the Fed, the China, the policy error. The policy error is higher than stagflation because what if Fed decides to do one thing, but then it doesn't work out because they didn't probably time the inflation right or they didn't time the policy right, and then they end up reversing the policy and basically introducing more and more things to stimulate the economy. So these are all the issues. Like supply chain is of course a big issue. Everybody is expecting the supply chain to get better in 2022 by the second quarter of 2022. What if the Omicron has actually delayed that reopening or easing of supply chain? We don't know that. Everything is just too new. So these were the top, I would say, worries that people have going into 2022. With all the issues still looming on our head, the bottleneck of supply chain, the Fed raising the interest rate, and of course the Omicron and how many new cases we are going to get. Is it more deadly? Is it less deadly? There is so much uncertain that we don't know yet. But one thing is certain, the more and more research I do, I see one common theme, that S&P is going to finish higher than where it is right now. That means that stock market is going to be fine in the next year. But the crazy explosive growth that we saw in 2020 might not be there. So one of the common themes that we have seen in any studies or polls that have taken place over the past 1 month is that inflation is number one concern in the coming days. But with that said, I would still put my money in the stock market than keeping it in a bank account because stocks, again, in my opinion, still a better investment. We might not see the gains that we saw in 2020. That's why we have to pick better companies, but we will still definitely do better than puny saving interest rates that we get right now. And I actually did a video on how to earn 7% risk-free in 2022, which sounds amazing given and sharing what I'm sharing with you today. And of course, a good way to diversify if you are at that stage and have the resources. I'll link that video towards the end of this video, so definitely check it out. I hope I was able to provide you some value, and if you enjoyed this video, then give it a thumbs up and consider subscribing. And if you like to speak one-on-one with a wonderful community, then consider joining our Discord and Patreon. Link are in the description below. As always, an absolute pleasure to share all of this with you. Until next time, you all have a sparkling day.